Hey everyone, it's incredible how the financial landscape is continuously evolving and shaping the world we live in. Today, I'm here to share some exciting news that's making waves across financial circles. India's foreign exchange reserves have soared, hitting a staggering all-time high of $651.5 billion. Now, for those who track economic trends, you'll know that this isn't just a number. It's a significant milestone, especially considering the global financial pressures we've been experiencing. Just a few months ago, India's forex reserves were seeing a downward trend due to the central bank's intervention to stabilize the rupee. They were strategically using the reserves to ensure the currency remained robust against major global currencies like the dollar and the euro, which is crucial for maintaining economic stability. But what turned the tide? The Reserve Bank of India has been quite proactive. Through careful market interventions and policies aimed at curbing undue fluctuations in the exchange rate, they've managed to not only stabilize but significantly boost the reserves. And guess what? This isn't about adhering to any predetermined targets. It's about making strategic moves that align with ongoing economic fundamentals. This achievement is particularly noteworthy. It reflects the strength and resilience of India's economic management, which is vital for sustaining growth and building investor confidence. It's a clear signal to the world that despite external pressures, the fundamentals of the Indian economy are strong. For finance enthusiasts, this is a fascinating development. It opens up discussions on how strategic financial management can lead to robust economic health. Whether you're an investor, a policymaker, or just someone keen on understanding global economics, India's recent financial milestone is something to watch. So, what do you think this means for the future of global economics? How will other nations respond to such a strategic elevation in forex reserves? Drop your thoughts in the comments below, and let's get this discussion going. Don't forget to like, share, and subscribe for more insightful updates. Until next time, keep analyzing and stay financially savvy.